There's two altcoins that look ready for major reversals, and in today's video I will be providing you guys with trading ideas on both of them with exact entries, stop loss and take profit targets. As always guys, before we start looking at a lower time frame execution, we gotta understand the higher time frame context on Ethereum. And what we can see is that Ethereum is still trading within this bigger PO3, in which we had accumulation right over here, followed by manipulation right over here, and Ethereum guys is still within the expansion phase towards the upside, with as a target still new all-time highs. And what we can also see on the daily time frame when we zoom in more locally is two extremely interesting things. The first thing that I'm noticing is this falling wedge pattern that is currently being developed on the price of Ethereum. As you can see, the trend lines both are getting respected extremely well, and if this daily falling wedge is indeed going to break out, that could already be a trigger for Ethereum to start that very hated rally towards new all-time highs. Now what we can also see on the daily time frame, which is very interesting to me, is that we had this massive wick to the downside right over here. Now I told you guys in the previous videos that it was very likely for Ethereum to form at least 50%. Now when we mark out that 50% level right over here, the EQ level of that wick, what can we see is that Ethereum exactly to the dollar accuracy bounced from the 50% wick fill level. And now this to me is a major sign that bulls might be in control and that this daily falling wedge is soon going to be breaking out, which means that we want to start looking at the lower time frame for a potential execution trigger. What we can see over here is that on a lower time frame guys, we are creating another beautiful PO3 pattern on Ethereum. Accumulation over here, manipulation over here before potential expansion towards the upside right over here. Now I've made a video on this where I go way more in depth what the difference is between a valid and an invalid PO3. After this video I will send you guys to that specific video, which you have to watch to understand the current trading ideas that I'm sharing with you guys today on Ethereum and on Chainlink, which are both based off that idea of a valid instead of an invalid PO3 pattern. I personally think that the bottom is currently in on Ethereum, since we are reclaiming this very important range low area right over here, which means that we can start looking at potential long executions. Now this means that if I think and if I believe that the current weekly low is in, is that our invalidation is right over here. Now we also know that we always want to enter where other people are getting stopped out. We already had our break of structure over here, so we are simply looking to play the higher low of a wave 1, a wave 2, which we are currently in, before potential bigger wave 3. Now currently, as I think that the bottom is in, where are we looking to enter? We are always looking to enter on the lower time frame where other people once again are getting stopped out. Now in order to find out where other people are getting stopped out, I'm analyzing this local structure right over here on Ethereum. And what I can see is that we are creating some very interesting structure. The first thing that I'm noticing is this current local fake break of structure over here, in which we are filling 50% indeed of this major wick right over here, where we are currently rejecting from. Now due to this local fake break of structure that we are putting in right over here, there's liquidity being engineered beneath the low over here. How so? Because people are looking at this most recent push to the upside that is breaking that high, not realizing that it's a fake break of structure and not a high probability break of structure, and therefore they still open up a long position targeting a potential breakout, or they're gonna long the pullback because of the break of that high. And where are those people looking to place their stop loss? They're looking to place their stop loss beneath the low right over here, which means that there's liquidity being engineered beneath that low, which means that if we are going to take out that low, that might be an area where I'm interested to execute a long on Ethereum. Now what we can also see is the break of this high over here. And guys, usually I would say that this is a valid break of structure. Why? Because the high that we break through over here brings us to a lower low over here compared to this low that brought us to that higher high. And therefore it's a valid high to break, and therefore it's a valid break of structure. But the problem in my opinion here is that before we broke that high, there was not really a purge of any major sales and liquidity pool, which is why I do not think it's a high probability break of structure. Because as you guys know by now, there's a difference between a high probability break of structure and a valid break of structure. Which means that yes, this could be an invalidation for longs, and I'm not saying that this is a bad invalidation for longs. I'm just saying when I see 3 longs lining up like this, I feel like I should always be using the lowest low out of them 3 as my invalidation for my long, and I should always be using the first low out of them 3 for potential executions for longs. Which means that if I've now identified 2 lows where I'm interested in executing longs on Ethereum, I can use the long tool to execute my first entry, and I will use that second low to execute a DCA entry. Now all that is resting for us right now is to identify the main target of this trade. And since we are still trading this lower time frame PO3 as I just explained to you guys, we should be finding our target within that upper range. And when I analyze this upper range, I can see that I have a major high resting right over here, which means that yes, the higher time frame context is pointing towards new all-time highs, and yes, I will hold this trade until new all-time highs if it plays out, but this will be the first target where I'm looking to take profit on my current position for Ethereum for an RR of 2.35 from the first entry and an RR of 13.73 from the second entry. When we look at a higher time frame context for Chainlink, we can see that Chainlink is still trading within this higher time frame range. And as I told you guys over the past few weeks, after deviation of the range low, which we traded and we made some good profits on this push towards the upside, technically speaking, we should be targeting the liquidity pool above that range high, which is the high over here. For now, Chainlink got rejected from that range high level. But on the lower time frame, Chainlink is just like Ethereum, forming a valid and high probability PO3. With our accumulation range over here, we have just witnessed the manipulation phase over here, and now we are looking at potential expansion towards the upside, towards potential $34 for Chainlink, which means that once again I'm looking at lower time frames for potential executions. And now once again guys, what we are looking at is a fake break of structure over here, and currently we are seeing another fake break of structure. Where are these fake breaks engineering liquidity? Indeed, they're engineering liquidity beneath the equal lows over here. Now understand that liquidity is not as simple as marking out 2 highs and 2 lows. Equal highs, equal lows, it's irrelevant. Liquidity can only be engineered by certain human behavior based off previous price action. So right now, because of the break of these highs, people are actually opening up breakout long positions on Chainlink, and they are looking to place a stop loss somewhere. And they are looking to place a stop loss beneath the lows that started that impulse that gave us that fake break of structure, aka the lows over here. Now that they're lining up as equal lows, it's just some extra confluence, but it's not the reason why this is where the liquidity is resting. Now what we can also see is a similar pattern over here as for Ethereum. Once again, a higher high that then brings us to a lower low over here, that then brings us to a higher high over here, aka this is a valid break of structure. But is it a high probability break of structure? In my opinion, not necessarily, because I would have liked to swap some more liquidity up on this push to the downside, okay? And once again, the main issue is that it's a decent probability break of structure and it's a valid break of structure. But guys, once again, I see 3 lows lining up over here on Chainlink, which means that the first low, aka the low over here, might be acting as a trap designed to engineer liquidity, and then we want to use this low to cover our stop loss. Now what I like about this low is that beneath this low is where we have this untapped demand area for Chainlink, which I think might need some tapping before a reversal takes place. So once again, we start to understand the higher time frame context, and then we look at the lower time frames for potential executions. First low for our first entry, and then we have the second low for our second entry into that demand. And guys, all that is resting once again for us is to figure out our target. And once again, as always, the target should be the second to highest high of that accumulation range over here. And now that second to highest high offers a decent RR of about 1.77 from the first entry and a much better RR of 6.31 from the second entry.